Hey everybody, how you doing? Economic Ninja here. We're going to talk about stagflation because a lot of company heads are talking about this right now. Some banks are talking about this. We're going to talk about the definition, what stagflation is. We're going to compare it to the 1970s and today. And then we're going to talk about the Federal Reserve and what they did with that awesome, huge quarter of a 1% interest rate hike and what could possibly happen in the future. So without further ado, let's do this. All right, guys, here we go. The definition of stagflation, we'll start with that. What is stagflation? Well, stagflation is characterized by slow economic growth and relatively high unemployment, or economic stagnation, which is at the same time accompanied by rising prices, i.e. inflation. Stagflation can be alternatively defined as a period of inflation combined with a decline in the gross domestic product. All right, here we go. Now, if your eyes are just rolled in the back of your head like a great white about to feed, then you're not alone, okay? Now, let's talk about this. First off, if you think stagflation and you've been around studying economics for a period of time, first thing you probably think about is Japan. Japan has been through a long period of stagflation. And you go, well, yeah, but Ninja, if we're like Japan, then technically we're not going to crash because Japan's been in this for like a couple decades and they're not crashing. Well, there's actually some interesting things about stagflation and collapse, okay? So a couple things. We're going to talk about a couple key takeaways. Stagflation refers to an economy that is experiencing a simultaneous increase in inflation and stagnation of economic output. Also, stagflation was first recognized during the 1970s when many developed economies experienced rapid inflation and high unemployment as a result of an oil shock. Weird. Then, you can't make this stuff up. Cycles, they repeat themselves, but this one's just bigger. Muy fantástico. Sorry, the prevailing economic theory at the time could not easily explain how stagflation could occur. And then the last point. Since the 1970s, rising price levels during periods of slow or negative economic growth have become somewhat of the norm rather than an exceptional situation. All right, before we go any further, guys, I want to thank today's sponsor. That's Blue Lagoon Resources. Their ticker is BLAGF. And we're going to talk about their company in a little bit, but we're going to stay on the stagflation because it actually ties in to resources and commodities and things like that. All right, so first off, stagflation's in the news. We're starting to talk about it now. Why? Because a lot of things are reminding economists and wealthy people of right now we are seeing the 1970s over again. But like I said, it's bigger or muy fantástico. I don't know. That's not even the proper term. Give me a better term in there when I'm thinking mucho grande. Like this is a bigger situation. The facts are oil is rising, right? We're also dealing with supply chain shock and we have inflation. And inflation is not transitory. It is here for a period of time until something breaks. Either the Federal Reserve slams rates so high above what real inflation is, not the CPI, or we have a collapse of the economy, a total deleveraging, and a liquidation event. Those are your two scenarios. Now, first, I want to say, the Federal Reserve, many Federal Reserve chairs have said before, we are very limited in our scope of what we can do in different economic circumstances. One thing they can do is during times of deflation, we can, or like a liquidity event, as prices are going down rapidly, and it's because of the health of the economy is not good, so people are contracting their spending, they're scared, they can inject tons of money. They did this through quantitative easing after the Great Recession started, when Lehman Brothers collapsed. They did a great job and they spurred the economy. And they did that spurring of the economy came into what we see now. Then there's another thing they can do. They say if we have inflation, we could slam rates up just like Jerome Powell did. The problem with that, the very serious problem with that is they go, well, we have to admit that it was policy error probably that brought us to the fact that now we got to slam rates up, but we are going to hurt a lot of people that were speculating in certain markets. One, which is huge and on everybody's mind, is real estate. If we did a Paul Volcker moment again, and we just took rates right up to, let's say, a Fed funds rate of 15, 18%, which would put the mortgages, 30-year mortgages, at about 18 to possibly 20% today, think about what that would do to the real estate market. Even BlackRock would not buy real estate. Why? because they could not take the money from the Federal Reserve at 15%, buy homes with it, and charge enough rent for them to cash flow, because people are going to go broke, okay? Because that high interest rate that the Fed slams up is going to affect everything from new auto loan debt, student debt, credit card debt, and mortgages, okay? So people are going to get hit hard. So they really don't like to do that, all right? Not only that, think about all the government uh, debt that's been out there that the government's been taking out. And do you think they can service that debt at that price? No, they cannot. And the Federal Reserve, because they're a private bank, they're not federal and they have no reserves, is not in the business of losing money. Okay, so just they're not going to go, hey, we're going to slam up rates, but government, don't worry, you can keep your rate at that price. Okay, so people need to realize how big of a deal this is. Now, in 1970s, when we went through a period of stagflation, what people need to realize is what I've been talking about for the last year and a half, is that we are moving into a commodities bull cycle, a super cycle, if you will. Lots of other people have talked about this, Harry Dent being one of them, right? And the most important thing we need to realize is as that commodity boom takes off, there can be times where the world just, did somebody just park behind me? Look at this. What do we got going on? He's here to hook up my cable. So I'm out in the middle of nowhere. This is where you park. In the Economic Ninjas dojo. Hey, there's no fear in this dojo though, so he looks very relaxed. Sorry, I digress. Point being is that as the commodity bull cycle runs up, that's exactly what happened. We had a time in the 70s of high unemployment. We had high inflation, but this is about to take the cake, guys. And then we also had commodities exploding. The price of oil, the price of gold, and the price of silver. That is where I want people positioned. Now, none of this is financial advice. I'm a dude with a bro hawk and a dream and some new sweet shades. Point being is that we want to be educated and prepared. So I've been bringing you all these different companies that, for advertising purposes to get their names out, but also I want people to learn from them. Now this company, Blue Lagoon Resources, full disclosure, I don't own this stock, but I want to talk about its story, things that I look at as I study, because I do own stocks in the resource sector. I do own junior miners and major miners. I have oil stocks. I have stocks to protect me, not only from inflation, but I'm set up to where when this boom happens, the acceleration of wealth is much greater than if I was just to hold a barrel of oil in my backyard or a few gold coins or some silver coins personally. Do I do that? Yes. Do I store metal? Yes. But I also understand the value of leverage. It's crazy that so few people are afraid of leverage, but and to be honest with you, it's not for everybody. But you have to understand on a basic term, like in 1980, as gold was exploding in price, the gold miners, and they're very hard. You've got to really weed through a lot of stuff because, for every one great mining company, there's companies that are not great, depending on how they run stuff or problems they come into, just like stocks, just like any company, right? For every Amazon that's out there, there was 10 companies trying to do what Amazon did and they failed, all right? So that's very, very important. So let's talk about some things I look at with these companies. We're gonna use Blue Lagoon Resources as an example. So first off, they're an mineral exploration company, and they're focused on, they have a high grade project in gold, a high gold project, and that's in a past producing gold mine called the Dome Mountain Mine, all right? The mine is accessible all year long, and I've talked to you about that when we're dealing with exploration companies or mining companies. You want your projects not to get snowed in, covered with permafrost, like we see on television shows that are trying to dig, and I can't dig, it's in the ice. So this mine, the Dome Mountain Mine, all year long, it's accessible, and it's located about 50 miles from a town called Smithers, northwestern British Columbia. It's Smithers, and it's located in northwestern British Columbia. I wonder where I've heard the term Smithers from. Please put that in the comments below. So they have 3 other projects. Now that's what I like. I like I'm looking for an exploration company. I don't want one that just has 1 or 2 projects. I like them having multiples, right? Because what happens if they miss it? They miss the mark. They go, man, we're pretty sure we got gold in here. We start drilling and they miss it, right? Well, that's all you got. And so you invest in a company that's only got 1 project, maybe 2, right? So this company totally has 4 projects, 4 properties, and these next 3 owned 100%. So one of them is called the Big Onion Copper Project. So you have not just gold, but you have some access to copper, and I don't know who names these things. I want to meet the guy, Okay, we're gonna mine here. What are we gonna call it? Big Onion. It's like, Okay, there's got to be a good story to go with that. I'm curious what the story is. Put in the comment section below if you guys got some great ideas for mining prospect claims, because it's like the first thing you think of when you write it on the document, and it's there forever. So they have access to copper. Then they also have 100% ownership in Peleton gold property. Now that is over 4,000 hectares, and it's known to have about 10 gold-bearing veins. All right, and they're in the process of working to get start drilling and stuff. The next one, the last one, the fourth one, is again 100% owned by the company, and it's called the Golden Wonder Project, and that's over 7,000 hectares, and that's located in west central British Columbia. Okay, now the other thing I like about when I'm looking at resource companies is how many drilling results do they have, because I need to look at history. So right now they just came out, Blue Lagoon just came out with a second set of drilling results. So I like that because I could go to the first set of drilling results, see what they were, see if they hit gold, silver, all those kind of things, and then compare that to the second result. And they start building this map, this map that goes around, and they show where all the different drilling results are, where the holes are, and what they found in the ground. And then I could see, okay, are they making progress or did they miss the mark, okay? Because an exploration company, and Blue Lagoon is no different, their job is to find a piece of land, say, okay, I think there's gold out here, and I drill right here, let's say, right here next to the Ninja, and I find a little bit. Okay, cool, we got something. So let's go set up another drill. And they make a map, and they try their hardest to find an area that is, okay, I'm gonna have gold over here, here, but maybe not over there. So we're gonna go drill there and there, but we won't drill over there. And those next drilling pockets, if they actually have gold, then it's gonna show, and they're gonna build this map. And this is the map and the drilling results that they take to these larger companies. And they say, look, either we want to do it and we want to develop the company to something bigger, or we want to sell our piece of land and we have X amount of gold inferred in the ground because we have these results, right? And then they sell it to another company, and that company comes in with the big equipment, digs out of the ground. Before you know it, it's around some lady's ring finger. Huh? Come on, guys. That's how the wedding ring gets there. So that's what I like. So they got a second set of drilling results, and they just came out with them a few days ago. So I'm going to give you a link to the website. It shows you the second set of drilling results, and I like that. It's very risky investing in all kinds of different assets, but it takes risk away as you start to be able to build the historical background of a company. It's one thing to talk about the management team, who runs the board of the company, their past experience. It's another thing to sit there and go, okay, now what have you guys been doing as the company you formed? What's gone on in the past? Has it worked? Has it not? You're right. It's a lot more than share price, because share price doesn't always represent what's going on in the ground and what the company's doing. Okay, so I want to make sure you know that. So that's the second thing that I like about the company. Okay, multiple properties is one, and then two sets of results. Now, I also want to talk about, when we're talking about resource companies, I'm going to explain this for you because this is a great question that I get. I've gotten a couple times. I want to talk about it because so many people are like, well, I know that there's more leverage when it comes to an exploration company as opposed to a junior miner. Because a junior miner, is coming out, they're digging in the ground, they're actually getting silver and they're selling it, or gold or copper, or anything, right? Lithium. It's coming out of the ground, they're selling it. So we know how much their run rate is, their bills, and we know how much they're digging out of the ground because they're quarterly results. So we can pretty much figure out, how much the company's worth. Whereas a exploration company, it's much harder because they're explorers, they're looking, right? So you are investing in the team of the company. You're investing in the piece of land, the past historical things, like Blue Lagoon talks about their major producing the Dome Mountain mine. It was a past producing mine. So they could go back through historical records and say, huh, the miners of the past got X amount of metal out of the ground. So we should be able to extract more metal because of new technological advances with larger heavy equipment, X-ray technology, all this crazy amazing stuff, chemical tests, things like that. Before, these older miners, depending on how old the mine was, they had a pickaxe, shovel, they were just scraping the surface, literally. And now mines can come into these older pockets and go, we can see what's going on. And exploration companies, it's even better sometimes. They go, hey, we know how much gold is found here. Let's drill below where the miners left off with their picks and shovels. And boom, we can hit it or we don't. And so that's what's really neat. Well, the thing is people ask this question. I'm going to answer it. What happens if they sell their company to to another company, a big mining company or a junior mining company comes up and goes, hey, we like what you're doing here. We've seen your results. We want to take advantage of it. Sounds funny. I'm literally doing this video right now, and my son is literally flying over top of me right now, right behind on the camera. Let's see if we can catch it. Yep, nope, probably can't even see it. That's him. I'm out near the airport filming, sorry. So he's out flying. So when they come, they do it a couple different ways. They said, look, we'll just straight up buy it out. We will give you your share price, your market cap is X. We will give you X plus 2. And we'll give it to you sometimes in the shares of our company. Sometimes they'll buy directly out. That's pretty rare, where they'll buy out cash all of the investors. I've rarely seen that, but mostly it's like, we're gonna give you our stock, we're gonna convert your company stock into ours, and ours at the day of this signing is worth even more than your stock. So the investor gets a share transfer. I've seen other things too, where share companies get warrants and options, and they still get to keep their original shares, but now they have warrants in another company, and the company is essentially, the bigger company becomes a controlling owner of the resource company. So there's so many different ways, but the point is when a resource company is able to graduate up, they said, we've found the stuff in the ground, we're ready to sell or we're ready to develop, and they find a company willing to do it, it's 99% of the time, it is a good thing. It becomes a windfall for the investors. And that's why people invest in the resource sector, especially in the exploration side. Now, I want to tell you one last thing. I don't put a ton of money into explorations, right? I nibble at first and then I slowly graduate in. I don't FOMO, and I get to know the team. I see the news releases, making sure they're always on top of telling us what they're doing. And then I start to gradually get more as my confidence level goes up, all right? And what's really sad is sometimes paper, gold and silver gets smacked down, or paper, copper contracts because of a liquidation event in the markets, and it's not their fault, and you can see the share price dump. And when you have all of the answers, like I'm bringing you these different companies and you go, I like this company, I like what they do, I'm really researching them, those are buying opportunities. Now, none of this is financial advice. I'm not a financial advisor. So anything you heard here, just don't take it as advice. But you can see where I'm going with this. To be a good investor, you need patience, knowledge, and understanding. And then you need to put all three of those together to make a successful investment. So guys, with that being said, I thank you so much for watching. Thank you so much, Lagoon Resources, for just sponsoring this video so that I can actually come and bring more and more information and news to Ninja Nation. Thank you so much, guys. I hope you have a great day. The Economic Ninja is out.